If you're thinking about investing in crypto in 2025, let me just say you're not alone. I know it can feel a little overwhelming, especially with all the hype that's going on, all the scams and the big price swings. But if you stick around, I'm going to break down step by step how to get started in crypto the right way. Whether you're totally new or you've been around the block, I'll show you everything you need to know without any of the complicated stuff or unnecessary hype that's going on. By the end of this video, you'll know how to get started, how to create your exchange and wallet accounts, how to keep your coins safe, how to spot good projects, and what mistakes to avoid. So let's jump right in. Let's start with the most basic question. What actually is a cryptocurrency? At its core, crypto is just a digital money that isn't controlled by any one government or a company. The most famous one you all know is Bitcoin, but there are thousands of others like Ethereum and Solana and newer names that pop up every year. These coins and tokens run on something called a blockchain, which is like a big public book that anyone can check, but no one can secretly change. The goal is to give people more control over their money, their data, and sometimes even their online identities. So, if you want to invest in crypto, step one is education. Don't put a dollar in until you understand the basics. Things like what a blockchain is, how wallets work, the difference between coins and tokens, and what makes a project legit or just another pump and dump, okay? Honestly, YouTube is full of free content, and you can always check out sites like CoinGecko, CoinMarketCap, or even the official websites of the projects you're interested in. Once you're ready to actually invest, you'll need a place to buy a crypto, right? Most people start with a centralized exchange because you need to transfer your fiat currency like USD, Euro, or pounds to cryptocurrency. And centralized exchanges are the platform that does that, okay? Think of them like a stock market or an app, but for crypto. Now, there's another type of exchange called a decentralized exchange, or DEX for short. Okay, so a decentralized exchange is different from a centralized exchange because it isn't run by any single company or authority. Instead, it's a platform built on blockchain where people trade crypto directly with each other using smart contracts. On a decentralized exchange, you stay in control of your funds and you usually don't need to create an account or provide a personal information. The platform doesn't hold your money as well. You connect your own wallet and you trade straight from it. In contrast, a centralized exchange like Binance, Coinbase acts as a middleman. They hold your funds and they require you to make an account and usually ask for ID verification. Centralized exchanges are often easier for beginners and support buying crypto with regular money, but you have to trust the exchange with your money. That's it. About the decentralized exchanges, they give you more control, but you need to be comfortable using your own wallet and handling your own security, right? Another key difference between centralized and a decentralized exchange is liquidity, okay? Liquidity is just means how easily and quickly you can buy or sell an asset without causing a big change in its price, right? On centralized exchanges, there's usually a lot more liquidity because all the buyers and all the sellers are trading at one place, and the exchange itself can also help keep the market active. This means you can buy or sell even large amounts of crypto quickly, okay? And you can also do that at predictable prices. On a decentralized exchange, which is the other one, liquidity depends on the people adding their own funds to liquidity pools. Sometimes this means less trading volume and you might see bigger price swings called slippage when buying or selling certain tokens, right? Especially new or the smaller ones. Higher liquidity is essential because it makes trading smoother, it makes it faster and less risky. And if there isn't enough liquidity, your trade might not even go through, or you might end up paying a lot more than you expected. Now, some of the biggest and most trusted centralized exchanges in 2025 are Binance, Coinbase, Kraken, and Bybit. Now, before you sign up, make sure that exchange is legal in your country and has good reviews. Watch out for exchange that promises huge bonuses or have a lot of complaints about withdrawals. Now, Let me show you a simple step-by-step example of how to register for a crypto exchange. Let's use Binance, the largest exchange in the world, as an example. Step 1. Go to the Binance website at binance.com or download the Binance app from your app store. That's it. Then click on register. Step 2. Choose whether you want to sign up with your email or phone number. Enter your email or your phone, then create a strong password. Now about the password, make it at least 8 characters with upper and lower cases, letters, numbers, and a special character as well. If you have a referral code, enter it to get any possible rewards. And that's the thing as well. Step 3. Binance will send you a verification code to your email or your phone. Enter that code to verify your account. Step 4. For better security, set up two-factor authentication using Google Authenticator or SMS. Now, Binance will give you backup codes. Store this in a safe place just in case you lose access to your phone. Step 5. Complete identity verification, also called KYC. Go to the verification section, upload your ID or password, and take a selfie as prompted. This process usually takes 5 to maybe 15 minutes or so to get approved. Once you're registered and verified, you can deposit now your money, you can buy crypto and use all of the Binance features like spot trading, futures, staking, NFTs, and launchpads and more. And Binance has over 350 coins and tokens available to trade, and their fees are very competitive as well, starting from just 0.1% and even lower if you use BNB. They also have lots of security features as well and a global community with support in many languages. A few tips. Always use two-factor authentication. Never share your codes or password, and always double check the website link to avoid phishing scams. Okay, for larger amounts of crypto, consider moving your funds to a private wallet, right? For that, there are two main types of personal wallets: the software wallets and the hardware wallets, right? The software wallets, they are sometimes called Web3 wallets, and they are apps or browser extensions like MetaMask, Trust Wallet, or Coinbase Wallet. These give you full control of your coins, okay? And they let you use DeFi, NFTs, and many things more. The risk is, since they're connected to the internet, they can be hacked if your device is compromised or if you fall for a phishing scam, okay? About the hardware wallets, on the other hand, they are physical devices like Ledger, Trezor, or Tangum, okay? These store your private keys offline, away from hackers and the malware. You plug them into your computer or you tap them to your phone only when you need to sign a transaction, right? This makes hardware wallets the gold standard for security, right? Especially if you're holding a large amount or planning to keep your crypto for a long time. So hardware wallet are a really good option to go to. Now here's a quick difference. Keeping your money on the exchange is convenient, but it could be risky since you don't truly control your funds. Now, using a software wallet gives you full control and easy access to all the things on the Web3, but you need to be careful about security on your devices, right? Hardware wallet, it gives you the highest level of safety because your keys are kept offline, but it's a bit less convenient for daily transactions. Now, if you want to see my top recommendations for both types of wallet, here's a quick list. For hardware wallets, my top 3 are Ledger, Trezor, and Tangum. For software wallets, it's MetaMask, Trust Wallet, and Coinbase Wallet. If you want a full breakdown of the pros and the cons, plus my personal ratings on security, fees, and compatibility, make sure to check out my previous video. There's a link in the description down below. Once you have decided on a wallet, you will set it up. Either it will be on a desktop or mobile or both, okay? For example, in case of MetaMask, you have a browser extension for it and also a mobile app. If you're new and don't have a wallet, you are going to create a new one. If you already have a MetaMask wallet, you will import it using the key phrases, okay? When you are setting up your wallet, you will choose your password and it will give you a seed phrase, okay? Which is also known as a recovery phrase. It will be a bunch of random words. Now, if you install MetaMask again or want to log into your wallet on mobile or any other device, you will use these phrases to import your wallet. Now, what's important here is to distinguish between a private key from a seed phrase. The private key is like your secret password to access and control your crypto in a specific wallet address. Now, each wallet address has its own unique private key, okay, you should never share it with anyone, because anyone with your private key can take your funds. The seed phrase, also called a recovery phrase, is a set of 12 to 24 random words that actually generate and restore all your private keys for that wallet. Think of the seed phrase as a master key that can unlock your entire wallet, okay, including every account and private key inside it. If you lose your device, you can use the seed phrase to restore your wallet and access all your crypto. So, while the private key is for one specific address, the seed phrase is like the backup for your whole wallet. Always keep your seed phrase safe and never share it with anyone, okay? Now, let's talk about what to actually buy. There are two main categories in crypto: coins and the tokens. Coins like Bitcoin or Ethereum are the backbone of their own blockchains. Tokens, on the other hand, they are built on the top of existing chains. Think of things like USDT, Uniswap, or all those meme coins, okay? If you're just getting started, stick with the big names: Bitcoin, Ethereum, maybe a couple of top 20 coins like Solana or Avalanche. These are less risky than tiny coins that nobody's ever heard of. But remember, crypto is still risky, no matter what. Don't put in your money you can't afford to lose. Before you buy anything, research the project, check out their website, their white paper, and see if they have a real community on places like Twitter, Discord, or Reddit. After looking through a few genuine projects with real communities, you will be able to differentiate between real and a fake engagements, right? A real project will always have a genuine and organic engagements. Look for projects with real use cases and a team that's public, not hiding behind fake names. If something promises guaranteed returns, that's usually a red flag, because nothing is guaranteed in crypto, right? Once you have decided on a crypto, here's how you can purchase it. If that coin or token is available on the exchange you're using, you can directly buy it from there, okay? Or you buy any stablecoin like USDT. Stablecoins are cryptocurrencies that are pegged to an actual currency, like USD or a euro. USDT is pegged to USD with 1-to-1 ratio. That means the value of 1 USD will always be equal to 1 USD. Hence, even though it is a crypto, the price of USDT will remain stable. So you can buy USDT, transfer it to your wallet, and then connect to any decentralized exchange where you can swap this USDT for the token of your choice. When you're ready to buy, place a small order to start, just to get a feel for how it works. Pay attention to the fees. Some exchanges, they charge higher fees for credit card buyers or for smaller transactions. Try to avoid panic buying when the price is surging or panic selling when there's a dip. The crypto market is super volatile. Even the big coins can swing from 10% more in a single day. Okay, once you've bought your coins, the next big decision is where to keep them. Okay, you can leave them to your crypto exchange, but that means you're trusting the exchange to keep your funds safe. If the exchange ever gets hacked, it freezes or withdrawals or just shuts down, you can lose everything. And this is from experience, because this has happened a couple of times before. That's why experienced investors move their crypto to a personal wallet that they control. Okay, now let's talk about investment strategies. The most popular is dollar cost averaging, which just means buying a little bit regularly instead of going all in at once. For example, you might buy $50 of Bitcoin every single week, no matter what the price is. Over time, this helps you smooth out the ups and downs. Some people, they try to trade. In other words, they buy low and they sell high. But be warned, most new traders actually lose money in this because timing is very crucial here. So if you want to trade, practice with small accounts and never trade with money you need for rent or groceries. Next, you'll also hear about staking, which is kind of like earning interest on certain coins by locking them up for a period of time. This works with coins like Ethereum, Solana, and others. Some wallets and exchanges make it really easy to stake, and you can earn extra coins just by holding. But always check the risk and if there's a lockup period. Okay. Another thing people get wrong is chasing the newest meme coin or NFT without understanding what it is. Yes, some people might have made big gains on coins like Dogecoin or random NFTs, but for every success story, there are hundreds who lose everything because they bought in too late or picked a scam. Sadly, only invest in things you actually understand. Let's talk about scams for a minute. If someone messages you out of nowhere, promising you to double your coins, ignore them. If you see a website that looks like a famous exchange, but the web address is like a little bit off, don't use it. Never share your private key or recovery phase with anyone ever. And if someone sends you a link or tells you to connect your wallet, always double check if it's the real site. Finally, keep in mind that governments around the world are paying more attention to crypto. In many countries, you need to report your crypto gains for taxes. Check the rules in your country. And if you're not sure, talk to a tax expert. It's always better to be safe than get a big surprise at tax time. So, to sum it up, number 1, learn the basics before investing. Number 2, choose a trusted exchange and set up your account safely. Number 3, always move your coins to a wallet you can control. Number 4, watch my previous videos for the best wallets this year, link in the description. Number 5, start with well-known coins and always do your own research. Number 6, invest slowly, dollar cost average if you can. Number 7, be careful of scams and never share your private info. Number 8, keep good records and pay attention to taxes. If you follow these steps, you'll be way ahead of most new investors in the crypto. If you have questions or want me to dive deeper into any topic, staking, NFTs, DeFi, or anything else, just let me know in the comments. If you found this video helpful, give it a like and subscribe for more real hype-free crypto guides. Good luck and stay safe out there.